All right, good morning, everyone. Louis Porcelino, Man Over Market, E-meeting, ES morning call, and it's going to be a wild one today. All right, so job report. Everything's great. You know, the economy's improving, so everybody believes that the Fed's going to cut the rates or raise the rates. And so because of that, gold is falling out of bed. Um, Bonds are falling out of bed. And now the next thing I want you to watch is 41.93 in the oil. Under there, we're going to lows. 41.93. We're going down to $30. All right. Just want you to watch that. You heard that here. I told you that gold, if it got under 1,113, and what, we're down another $40 since then, or $35. So I'm telling you right now, it looks, and I'm the only one, I've been saying it for a year, that I thought the Fed would not do this. I thought that they couldn't come off zero. But where the market's where it's at, it made almost a 10% correction. I think they have to get it over with, make the rate hike, and I think they have to do it just to save face. I mean, they're going to do this. So, what happens now if the market doesn't stop at 10%, and then what do they do then? Then they don't cut. So all we can care, we're traders. We want volatility. Let's go watch the markets. Be careful today. I think based on the profile from yesterday that I thought the market was going to trade on both sides of the spectrum. I didn't realize that we're going to get this sell-off. We got some bottoms down there we have to look at, and we'll go from there. All right, everybody. Let's go to screen share, and let's get ready for a wild day today. All right, I'll start out here with profile. All right, so on the number, we've spiked down here. Excuse me, right here, and we've made a low at 21.75, 21.82. I'm sorry. All right, so we have single prints that start at 21.81.5 down to 20.75 1/4, and then we have an unfinished bottom way down here at 20.64 1/4. All right. So now, it's what they do is they tell you to buy the rumor, sell the fact, right? The fact is that they haven't cut the rates yet. Okay. So I think this market is going to trade on both sides today. They didn't cut the rate, or they didn't raise the rate. I keep saying that because bonds go down. But anyway, they haven't raised the rate as of yet. But they say the economy's in good shape. 270 wages are up. So now they want to get ahead of inflation. If we could ever get to 2%, which I don't know if we're gonna, because you're getting oil down to $25. You watch. All right. So based on profile and what we've seen, okay, it's basically unfinished on both ends. Okay. So you're gonna have to be careful. It's gonna be a wild trade today, and I think you're gonna like the volatility. But you know what? The days like today, if you put some dough in your pocket, okay, keep it. All right. Yesterday's right here, okay, the low before we went back up and closed unchanged was 20.89.5. Let's see if I think this is the key here. All right. Are we going to be able to trade below that? Get back inside here, inside value, and so on. So I think you got to kind of play it close to the vest, because it's going to get a turnaround today. All right. I'll let you know after bracket, after the first hour and a half, if I think we're going to turn around today. But we're definitely going to sell off. And, are people really going to run out of the equities? Are they going to really run out of equities? I don't know. Let's take a look at the chart the way it looks here. All right. So we've got 2089, the bottom of value. VPOC at 2094, value area high at 2099, bull bear zone way up here at 2100. Okay, 5-minute pivot is way up here. Okay, at 2099. Let's see. Let's go to a 30-minute. See where that's at. See if we took it out. All right, 30-minute in a sell. The only thing we can do now is go to a 60-minute. Let's see where that's at. So they're all in a sell. They're all above us. All right. I know that doesn't make sense to you, but I'm just looking at the red dots, people. All right. So when you get the software, you'll be able to do the same thing. All right. So I think the market may go down and, take those bottoms out, and this is what happens when you rally off the lows, right? We rallied off the 1850. We went straight up. Okay. And, you left some poor structure down below. So let's take a look at there's the Russell and a sell. There's YM and a sell. And there's the NASDAQ and a sell. Straight across the board. Okay. Just to recap this again, I want you to be aware of what we got down below. So yesterday's low, we're taking it out once again at 2084. None of this stuff matters to me until we do it in the regular trading range. So covering this stuff off doesn't mean anything to me until we start printing bracket B. When we start printing bracket B, then this stuff matters to me. All right. All right. So here, 81.70, 81.5 down to 75 and a quarter. Okay. And then down to here is an old low. I'll go back here and I'll show it to you. All right. Unfinished. Okay. Right here. All right. All right. And there's the single prints right there. Okay. All right. Okay. Just so, I don't want to go too fast. All right. Any questions? Make sure you get them in here to me so we can address them now before the market starts trading like the crazy thing, like crazy. All right. So let's talk about GL gold. Let's talk about gold. Look at this. All right. Gold is, so, you can go back to my videos. I should have opened up my day chart on gold, but I basically said that gold will really, I was bullish gold unless it traded below, I think the number was 1,113.50. And since then, we had a day close underneath there, and now we have made a spike low right now at 1086.20. And if they come through at this rate hike, people will get out of gold. I mean, I think gold's going to $1,000. It's going to $86 lower from where we're at right now. All right. And there's some people were calling for $950, but I think $1,000 is just a great psychological target. All right. And then here's bonds. Here's where they were trading before the number. The number came out. All right. And now we're trading at 152. I should have opened up my day charts. I will post my day charts on Twitter because we're trading right at where bonds were bullish. And if we have a close, I think below 152.16, I think that's going to be right here. If it's right at is going to be the negative taking bonds back down. I mean, definitely you'll see the 148 area. All right. So that's what's going on in bonds. I will post up my day charts. I didn't open them today because I was all excited about the move. All right. And then let's take a look at oil right here. Okay. So I had posted a couple weeks ago, about last week before we had this spike up to 47. We made a low of 42.5, 42.38, and my number was 41.93. So if we get a day close underneath 41.93, look out for oil. All right. So that's where we're at with that. Typically on days like today, you have to sort of gauge your, because things are going to be over exaggerated. There's going to be a lot of different issues, a lot of people, a lot of different opinions in here right now. So, I mean, you got to, what they say, sell the rumor, buy the fact. They have not raised rates yet. I mean, is it going to be in December? If the equity markets get crushed, now will they, basically say we're data dependent, even though the job is created, they think, they're going to have to do something. I mean, they've created a zero interest rate bubble, not only in in interest rates, but also in equities. So, I'm sure right now there's a bunch of people getting crushed right now, and there's a bunch of margin calls going on when it comes to gold and interest rates right now, because people are not used to this volatility. And the equities seem to be, we've been very volatile, so they're, people haven't been that exposed. But all these algos that were written for interest rates have very tight ranges, and when you get ranges like this, there's always a blowout. So we may hear it in the news today. Any questions, Anthony? All right. So recapping. All right here, 81 half down to 75 half, and if it really gets wild, I mean, we could get this being 2064 and a quarter. Okay, 2064 and a quarter. I can show you a day chart. I want to show you a day chart. I'd have to open up that other software probably, but you know what? Be careful today. It's Friday, and I think the market may, it could trade both sides. If you take a look what's going on up top, all right, let me pull this down. All right. So this is unfinished here. Okay. And then I put a bunch of stuff. Look at all the tops we got up here, right? This is unfinished. Okay. All right. And then we got single prints up here from 2105 half up to 2108 half. And then we have old top at 21975. It's sort of like all the way up until this is the adjusted high for the contract at 2117. I know we're looking at 2085 thinking, how's that going to happen? But we will keep you abreast of what's going on. That's for sure. Let me take a look at if there's anything else I can show you. I'm going to try to bring a day chart in here. All right. Okay. All right. Huh? What do I got on there? My charts went crazy again. Yeah. That's all right. Huh? I get all my charts went crazy. Anyway, let's am I still sharing this screen right here?
He says, we get a question.
Go ahead.
Lewis, Fed increased the balance sheet from 800 million to 4 trillion. How do you think that gets resolved?
You're asking me? Yeah. Ask them. You know what? 800 million and 4 trillion. You're right. And they've got to get out of that. And the only way I can think about it now is, well, so what do you do, right? I mean, what we got to do is we got to be able to sell our bonds, right? And get out of where we're at. And the only thing is, if we raise rates, our bonds become more attractive and we can start, unloading the bonds. You're right. How are we going to get out of that? How are we going to get out of it? It's a house of cards, and the same thing's happening in Europe now. But they're still in easing, right? And here we are. We're going to go the other way. I mean, I think that the issue is that we've beat the rest of the world, and we were first, right? And people thought we were crazy, but it was the only solution at the time. So I just I don't have an answer for that. I wish I didn't go to Harvard. I'm not an economist. I'm a trader, and I see things like this and I go, this is crazy. This is absolutely crazy. So I don't have an answer for that. I mean, it makes sense if we raise our rates that we can unload the bonds, right? Uh, so that's about it. I mean, we're rallying back here. Remember, this was the. I'm going to have to restart my charts, my computer. So we came back here. So I mean, this is going to be a wild trade today. It's going to be a wild trade today. So I think you got to be careful, be close to the vest, and not get yourself in trouble, because you can get yourself in trouble on days like today. All right, let me go to. All right, for me, it's off early today. Going to North Dakota. Looking forward to playing the Bisons up in North Dakota. They have 18,000 or 19,000 people sell out of their games. Western Illinois needs to go up there. It's a must-win game for us if we're going to get in the playoffs. North Dakota has the funny green, so I've put my Western Illinois hat on top of them, and hopefully we can come away with a victory. Looking forward to that. Stay, on days like today, if you catch a good trade, put the money in the bank and leave. Put the money in the bank and leave, because these are the kind of days that you could get whipsawed, and you get a little cocky because you get some money in the bank early, and then what do? You give it back, and you ruin your Friday and you ruin the whole week. So be careful, and stay with us on Twitter, and I will give you updated on the pivots and the market sentiment. So, all right, everybody, I'll talk to you. Have a good week, and we'll be seeing you. All right, bye.